Welcome to the Motley Fool's Crunch Time series, where we scout out a single company from their story to their opportunities and risks. Today, I'm going to be covering Crocs, the rubber shoe company that has a PE ratio of just 6.6 right now. Let's start with the company's business strategy. Crocs makes shoes. It makes shoes under two brands, the Crocs brand and the Heydude brand. Now, the growth story of those two companies is very different. Crocs has been a slow but steady growth company. Heydude has really struggled after the company's $2.5 billion acquisition in 2022. I'll get to that in just a second. The other thing to think about with Crocs is their retail strategy. They sell products to customers through direct-to-consumer channels and also through wholesale partners, which ultimately ends up on retail store shelves. To reach those customers, Crocs markets through email marketing, social media, TV, and other sources. So like most media companies, this is really a brand business at the end of the day. And when we think about their brands, let's think about their growth opportunity in both of these two brands. The Crocs brand is slow but steady growth. This is not going to blow you away with double-digit growth, but it is going to grow in low to mid-single digits year after year and generate steady cash flow. That's really the appeal of the Crocs brand. And it's been a much more durable brand than I think a lot of us thought a few years ago. The Heydude brand was supposed to be the growth brand after Crocs acquired the company, but it's been a bit of a disaster. Revenue is down almost 20% from its peak, but a turnaround may be brewing. You can see from these revenue numbers here, the revenue was up sequentially in the most recent quarter, and the comps get a little bit easier in 2025. So this may be a brand that turns to growth starting next year. With new marketing and endorsements, this could ultimately be a winner instead of being an anchor, which has been dragging down Crocs over the past couple of years. But not everything is rosy with Crocs. There is, of course, risks. One of the biggest risks is the company's $1.35 billion worth of long-term debt. Most of that debt comes from the acquisition of Heydude. The debt has been paid down over time, so the debt rate is falling, not quite the same risk as it once was, but this has really cost the company a lot of opportunity to do things like buy back stock. There's, of course, also brand volatility. This is just inherent in the retail brand business. The Crocs brand could go from being a relatively popular brand and a high growth brand actually in Asia to a brand that falls out of favor, much like Heydude did over the past couple of years. The history of retail tells us that sentiment changes very quickly for consumers. So unless Crocs and its management can really keep up with that, that is a big risk for the company. But what's my prediction? I think the value is ultimately too good to pass up for Crocs. This is a solid cash flow company. The worst days for Heydude are likely behind us, and the Crocs brand has proven to be incredibly durable. Like I said, still a growing brand, especially in newer markets like Asia, where that growth rate is in double digits right now. So at 6.6 times earnings with buybacks and debt repurchases, I think this is a great value for investors. And if there is a turnaround at Heydude, could get a better multiple in the future as well. So let's recap. Crocs is a cheap stock with good brands and solid cash flow. The upside for investors is if the Heydude brand does make a turnaround this year or next, and this goes from a company growing in low single digits to potentially higher single digits with that turnaround at Heydude. And in the meantime, management is going to be buying back stock and paying off debt with all the cash flow that they're generating from the business. Now, with the Motley Fool, your comments make us all smarter. So please comment with your own research and insights about Crocs. Tell us what you want to see next on Crunch Time. And of course, check out fool.com/invest to get the top 10 stocks to buy right now. Thanks for watching, everybody. We'll see you here next time.